All right, well, it's 9 o'clock. Welcome to Commercial Multifamily Masterminds. Glad to see you all here. I am still letting people in, but would like to go around since it's a small group right now. Would like to go around if you guys can introduce yourselves. I'll start first. My name is Alicia Milton. I am here in Arizona. I am a local broker here in the state and also investor here in the state. I'm also a part of Daryl's investment team. And you'll notice that Daryl's not here today. He had a doctor's appointment that he needed to go to. So he may join us later. You guys know how dedicated he is. So he may join us just a little later. So I'm a part of his investment team. We have a group of about 11 of us, and we're in several different markets. And so I am going to hand the mic off to Salim Hashim. You're muted, Hashim.
Mute. Yes. How are you today?
Good, thank you.
Okay. I would appreciate if you called me Sal. And I'm retired as an air conditioning engineer in New York City. And I have my license in New Jersey for real estate. I'm an investor and I'm using my IRA self-directed to invest in trying to be multifamilies. So that's a little bit about my background.
Awesome. I see Vernon.
Oh, there's two Vernons, I think, on here, Vernon Beckford and Vernon myself. Hi, I'm a real estate investor in single family down here in Dallas-Fort Worth, Texas, and moving into multifamily. And I'm just joining the group to learn about the expansion into multifamily.
Thank you. Awesome. Robert Aragona.
Good morning, Alicia. Great
Good
job
morning.
taking over here. How are you? How's everyone? Robert Aragona here of Garden State Funding in New Jersey. And what we do is provide loans, commercial real estate, mortgages, loans, ranging from single family 1 to 4 to your multifamily, mixed use, and a lot of in between. Lately, I've been doing a lot of lines of credit, trying to set up business owners with a small line of credit from 25,000 up to 150. The only requirements are 2 years in business and a credit score of 700 or greater. You can use anything for your real estate business or down payment money or earnest money, things like that. That comes in handy. And I also provide securities type. It's basically a leverage in your securities to get a loan. Only publicly traded stocks, bonds, and mutual funds. I can help you with that if that's needed. So I'll put all my info in the chat and hopefully we get together, talk, and try to get your deals to the finish line. Thanks.
Awesome. And I would love to introduce our other vendor, Mark Gross.
Thank you, Alicia. Appreciate it. I'm Mark Gross from CSSI, coming to you today from the Chicago area. We are CSSI is Cost Segregation Services Incorporated. We're the largest provider of cost segregation services in the country. My information is in the chat. Be happy to provide a no-cost preliminary analysis for anybody nationwide. If you happen to be attending the BEC Best Ever Conference in Denver later this month, let me know. I'm one of the sponsors and we'll have a booth there. Please stop by and say hi. And remember, 2022 is the last year for 100% bonus depreciation. Thank you.
Awesome, awesome, awesome. Well, it looks like we have a hearty group, so we will continue the introductions in just a moment. I want to be mindful of everyone's time and make sure that I get everyone in, but also to run the meeting, how Daryl runs the meeting, and do his opening. As you all know, that this is, can you see my screen?
Yes, yes, Alicia.
Yes, okay, awesome.
Yeah.
Okay. This is Commercial Multifamily Masterminds. We are an affiliate of the GOB network of apartment investors. As you all know, and those of you who may be new, the purpose of this mastermind group is to get rid of the competitive mindset and to have the mastermind mindset. It's here where we will do everything within our power to assist you in getting your investment opportunity across the finish line. We have new investors and seasoned investors. We have accredited and non-accredited, and we are wanting investors to be a part of this mastermind group. We welcome you to the Commercial Multifamily Masterminds, an affiliate of the GOB. As you all know, Daryl likes to quote Napoleon Hill. So the mastermind principle, the coordination of knowledge and effort of two or more people who work toward a definite purpose in the spirit of harmony. And that's so important that we all work together in the spirit of harmony, because it'll help us when we take down opportunities. When we move together, we can leverage more together. And so at this time, I'd like to introduce Jim Biggs. I'm not sure if he's on yet. Let me check. Oh, he is. Yay. I was ready, Jim, but I'd love for you to speak.
Good morning.
On the GOB.
Thank you. I appreciate it. So good morning, everyone. Most everyone knows who I am and who the GOB is, but if you are first time here, my name is Jim Biggs. I founded the GOB network to basically help people that are trying to break into this industry, or to help people that are stuck, or to be a resource for those people. And so we have, as Alicia explained, everything from somebody who's just getting started to very experienced people who can act as a sponsor and bring their balance sheet, net worth, liquidity, schedule of real estate owned to a deal if you need that in order to close. And we do operate as a nonprofit. There is no financial cost to join, but we tell everyone that there is two things that we require. And one is we're really only looking to do business with go-givers. And we also are looking for people that want to participate. We're looking for action takers, people that will really work toward trying to achieve their goals. But having said that, everyone starts at a different place and requires different type of help. It's a big network, but it's a network built by its members, and it depends on its members to reach in and find your mentor, reach in and find your partners, reach in and take what you need from the network in order to be a success. So look forward to speaking with everyone. Thanks.
Awesome. Thank you, Jim. Appreciate that. Okay, so we have our vendors here that we'd like to continue introducing. Parker Purcell, are you there?
I am here in the flesh. Yeah, so I'm Parker Purcell. I actually did a webinar with Keisha Kennedy last night. So if any of you were on there, appreciate y'all showing up. But what I do is work with Damian Lupo and the EQRP company and help individuals self-direct their retirement with peace of mind into alternative assets. So if you've got any retirement sitting in IRAs, or if you're a syndicator and have investors with IRAs that you're using for real estate deals, I'd love to have a conversation with you about how to help them escape some massive tax burdens that they could incur and give them more freedom and control. Appreciate it, Alicia.
Thank you, Parker. Let's see. Is the Stack Source Jim in here? I don't know why his name is escaping me.
Hey, Alicia, I'm here. Chris Peters.
There you are, Chris. There you go.
Hey, I'm here. Thank you. Good morning, everybody. Stack Source, we are a commercial real estate financing platform focused on all commercial asset types and 5+ unit residential or multifamily. We've got a platform of about 1,400 unique capital programs, including banks, credit unions, life co, private lenders, debt funds, agencies, CMBS, REITs. We do everything from ground up construction, value add, repositioning, and stabilized properties. We're nationwide. So, any questions, please reach out. Otherwise, thank you.
Awesome. Thank you, Chris. And do we have, oh, Jim, and pardon me if you mentioned this already, did you mention the GOB Network conference?
I did not. Thank you very much. I'll make sure and drop something in the chat. But our second annual conference is coming up in Chicago in June. It looks like that we're going to be able to secure Navy Pier, and we're trying to do a conference that really emphasizes networking and deal making. So we're going to have a lot of the big major brokers in the conference, and we're inviting them to bring deals with them to the conference so that we can actually take down some deals during the conference. And also lenders like Chris will be there to help facilitate those deals. And so we're going to try, if we can, to pre-vet some of them so that we already know what the lending looks like and have it ready to go so that we can get a deal LOI done on the weekend. But more importantly, we're really going to focus on the networking aspect and try to make it something that's out of this world for both the people that are there in person and also the people that are there virtually. And we're going to have follow-up. We're having it, the plan is right now to have it Wednesday and Thursday, so that Friday and Saturday you can stay over for more in-person networking. We plan on having several different things for you to choose from for a deeper immersive networking experience. So we're thinking a shopping spree on the Magnificent Mile for the ladies, maybe a Cubs game and a bar crawl for the guys, or maybe a tour on one of the architectural tours, either on the double-decker open-air bus or on the water taxis. Also the museum campus, maybe do something down there if we want to do more of a family thing. So there's just so much to do in Chicagoland. I'll drop something here, a link to the information about that so that you guys can take a look at it and see all the things that are available to do during the network. And I think that we also have Mark and Robert still as vendors that are on today, Alicia.
Awesome.
I'll just mention also that there's a brand new hotel that's at Navy Pier. So if you want to stay right there, that would be convenient.
Fantastic. Awesome. So make sure you all pay attention to that link that Jim drops in the chat. If you haven't already signed up, please do. Don't wait till the last minute because we don't want it to get sold out.
Alicia, I will say that for the first 100 people, we're offering a super early bird special of $97. And if you've been to these conferences, you know that most of them are anywhere from $200 to $700. It just cost me $5,000 to go to the one that I went to in Orlando a couple of weeks ago. And the best ever conference, I think, is $700 right now to go to that one in February. So we're almost sold out of those $97 tickets. So if you're interested in going, I would highly encourage you to follow the link that I drop in and get your ticket sooner rather than later.
Awesome. Thank you, Jim.
Thanks.
Okay, everyone. So if you didn't know already, here's the Facebook page for Commercial Multifamily Masterminds. You know you have the right page when you see Daryl's logo here. This is not the place to list your listings, but to come here on Tuesday mornings to share your listings, your properties, your opportunities, your underwriting. If you have underwriting, hopefully you saw Daryl's message in GOB Network Slack channel that he's looking for those to present their underwriting. We do have a presenter today, and so I'm not going to delay. I want to make sure that you know where the Facebook page is. Here it is. There's some valuable information referenced here if you're looking for different marketing events, reminders, whatever the case may be. This is the platform for it. And then what you'll see when you join the commercial multifamily masterminds, there's 3 questions and then there's 3 rules. Make sure you answer those 3 questions because you won't be admitted to the group unless you answer those. So be mindful of that. Invite your friends, your fellow investors, because as you've seen from everything that Daryl does, it's always reciprocity. You give, you take, and everybody shares in the journey. And so I think Dale, and hopefully I'm pronouncing your name correctly. If not, let me know.
Yes, it is. It's Dolly. So please forget the other letters that are showing on the screen because it could be a tongue twister. So my name is Dolly Garcia, and I've been in the real estate business for 20 years. I survived the last recession, not in a great way, but I learned a lot of net lessons, hard knock. I'm originally from the Bronx. I'm living in Atlanta now for 8 years, and I'm into multifamily investments, 5+ units, and I'm looking to grow my portfolio. I also have a business. It's called Gold Crown Credit, and I help business credit building, and I do business funding, kind of similar to what Rob does. The only thing is that you can be a new business. It doesn't have to be a 2-year requirement. You can have a brand new LLC or corp and still get access to funding. So I'll put my information in the chat, and thank you for having me here today.
You're welcome. And did you have underwriting to present as well?
No, I was actually, I was invited by Daryl yesterday. He sent me that sheet, but I don't have any underwriting just yet to share,
Okay.
but I will.
Okay. You
Thank
will, as in on another day?
Well, yes.
Okay.
Thank you.
Okay, sounds good. Awesome. So at this time, I'm going to ask if there's any owners on here that are looking to download their properties and sell them. This is the platform to speak up and present your property. So do we have any owners here on the line that have properties that you're looking to sell? Owners, brokers. Don't be shy. Okay, we have all buyers and investors here, right? Okay, awesome, awesome. So make sure you drop your information in the chat so that we can all connect. What I would like to do, because we had planned for underwriting to be presented, what I would like to do, because I see a lot of people here today, I would like to answer some of your questions, like your burning questions, because we have some very seasoned investors and sponsors here on the call. And this is a platform where we love to get back. So if any of you have those questions, maybe there's a term that you don't understand, maybe there's an underwriting that you're looking for, which Daryl and our team, we use the Spencer Burton model, which is excellent. You know, every model has its quirks, but it's a model that we use, and I'll drop that information in the chat. But do you all need help with underwriting? Does anyone have underwriting that they would like to present? If you do, put your hand up, and then that way we can go in order to answer some of your questions. Hi, Janelle.
She's coming back.
Awesome, James.
Okay, good morning, everyone. How are you beautiful people doing this lovely morning?
Wonderful.
Put your hands up, and you can't talk, put your hand up, let me see you. Okay, here's my question. Alicia, is as far as underwriting is concerned. Okay, so when you do your underwriting, you take the OM. Some people use the OM information. Depending on your model, the model we use, what we do, we take the OM information, put it in the first column. Okay, then we go to the T12 and go to the rent row, put that in the second column. Okay, and then we go to the third, and then we put our assumptions in there. Okay, and then you will come up with an evaluation of the property for the first year. Here's where I get hung up at. Usually, when you do that, the evaluation is way below the asking price. So what I'm trying to figure out now is how to take the steps I just mentioned and come up with an offer price. You know, you got the pro forma, you go and do your pro forma, and you say, okay, you say your pro forma based on all the information you got over here. Let's say, as an example, your loss to lease. I was looking at a property the other day. Loss to lease is 49%. Loss to lease is 49%. When I say loss to lease, I'm talking about the actual rent right here today and the market rent where you can get it to. So when you look at that, it's like 49%. So of course, when you do your evaluation, it's going to be way off. So how do you figure that out? How do you close the gap? How do you write your pro forma up for the first year? Am I making sense? So help me out there.
Yeah, and
We
this
changed
forum,
it. Oh, go ahead.
no, I was just gonna say this forum is open for anyone to answer. So go ahead, Kenneth.
Well, my first question is why is it like 49% below? And then the second thing is I would not try to scale at all into the first year because I had a couple of things where, you know, depending on if you want to keep the tenant base, you're going to do updating or you turn it over, you know, maybe scaling it within like 3 years and get like a 10% a year. Because if you start bumping it up like 20% a year or upon like evicting everybody, you're going to have a higher turnover cost and higher vacancy rate. And then maybe, you know.
Hi, my name is Jacqueline. I'm actually calling.
So I mean, I would just be, I've seen that too, because rent growth has been like 20% last year, and most deals coming on the market these days, they're saying they're below market. So if it's 49%, the first question is why? You know, is it the building itself? Because you know that could be the thing. And then the second thing is, I don't think. I mean, my personal opinion is, you know, how do you acclimate or get up to market rents? You can't do it in a year because you know you're just going to have higher vacancy and higher turnover costs. So I would bump it up maybe 10% a year with the goal of getting, you know, to around market rate within 3 years or whatever your exit plan is, like either the refinance or sale in 3 years, trying to get it there. And don't try to get it all in year one, because I think that's just going to, you know, increase your vacancies, turnovers, maintenance, and just hit your bottom line.
Okay, so Ken, let me repeat what you just said, make sure I understand. So basically what you're saying is forget the first year, your projection is for 5 years, refi the third year, the fifth year you want to sell, you know, you want to sell. So basically what you're saying, you cannot go from rent of $1,000 to $1,900 the first year, but bleed it out over that 3-year period time, 5-year period time. Okay, is that basically what you said?
Yeah. Basically, like when is your next capital event? Is your business plan to refinance or is it the sale? And this, like, try to scale it, because like $1,000 to $1,900 is a huge difference. So, you know, you're not gonna have the same tenant be able to pay that. And the second thing is, if you can get $1,900 now, why is it only getting $1,000?
Right.
You know, so that'd be like the number one question, because
okay,
every pro forma I see says below market rents, but when you start diving into it, it's either in a bad neighborhood or that units haven't been updated in 40 years or since the 1980s. So, you know, they might be hiding some costs there. So but eventually try to scale them up. So at the next capital event, either the refinance, that's when your rents are just approaching market.
Okay.
Yeah, I think the asking price, you might be able to lower your offer significantly because he hasn't risen the rates of the rents. So you can't always buy on what could be. And then, like Ken said, you might have to spend a lot of capital bringing these apartments up. So I wouldn't give him what he wants.
Okay. Where's Jim at? Come on, Jim. Talk to me, Jim.
You've got a ton of experienced people on here. I was going to try to let everyone else.
Okay, okay.
But I will say to you, James, I will disagree, not in principle, but just to say, when do you want to be a real estate investor? And the hardest thing is for everyone on this call to actually become a real estate investor. There's many of us that are here trying to figure out, how do we get our first investment? And my advice to you is just go get it. My advice to you is, if you want to be a real estate investor today, make the decision that you're going to be a real estate investor. If you have the money to go buy a 4-unit and that's all you have, you know, there's several people on this call that can get you a HUD FHA 203B loan or other types of loans that will get you almost all of the money. So you don't need a lot of the money yourself, and you can even have a relatively low credit score and still get money. And so I've seen there's a hard money lender on here today. I know Robert's on here today. Chris is on here today. There's money out here that will help you get deals done. But if you're trying to find a bargain on every deal, you're hamstringing yourself, you're handcuffing yourself, you're holding this for the long term. Don't look at whether you got a great deal today. Look at whether or not you've got a great deal in 5 years. Otherwise, you're going to be sitting on the sidelines. Now, if you can find a great deal, and if you want to negotiate and you love the game of negotiating, then absolutely go out there and negotiate on the property. But have in mind that you're going to buy that property today, regardless of how the negotiations go. Or give yourself a deadline of a week. If you want to negotiate something today and then a different one tomorrow and a different one, you know, if you want to go back and forth, but make the decision to do it. Make the decision to buy. I don't care if you're buying a small 4-unit, you cannot overpay for the property. You cannot overpay for the property. If the asking price is $400,000 and you overpay by 10%, you paid $440. If you overpay by 20%, you paid $480. And I'm telling you, over a period of 5 years, you're going to make that up easily. So don't get caught up on how much you paid for it, and remain always an investor that wants to be an investor. Get off the sidelines, make a decision, overcome your fear. And if you have absolutely no money, find someone on this call who has too much money and not enough time. If that's you, identify yourself. Say, bring me a good property and I will help you. I've got the credit, I've got the money. We'll partner 50-50 on this deal, or whatever you think is fair. And don't be afraid, by the way, if the person has the money and you don't, if the person has the credit and you don't, they're the one that has all the risk, not you. So don't be afraid of giving them more. On my first deal, if somebody made me that offer, I would happily take 10%, 20% of the deal, just to prove to them that, you know, I'm willing to go the extra mile. I'm willing to learn on the job. I'm willing, you know, I want a good long-term partner. But I would also tell those partners, and if you're that person that has money and credit right now on the call, if they make you an offer that says, look, I'll give you 100% of the money, but once I double your investment, this is my deal, 100% my deal. Or if you don't think that's fair, then say, okay, we'll split it 50-50 after you double my investment. And whatever you do, don't let them self-manage.
Okay, Alicia, Alicia, Jim said something very important, Alicia. Can I respond to that? Because it's very important. What I'm looking at, right, is Jim, what you're saying is a 4-unit versus a 50-unit. Okay, so that was the evaluation I was talking about. Now let's talk about a 4-unit real quick here. I'm in the Washington, D.C. area here. So when you look at a 4-unit, you're talking about $800,000 right off the bat, just about. Okay, 600 to 800,000. Okay, so but the property right now, when I gave you that the difference between the actual rent and the market rent. Okay, so what happened there is that the rent right this second is around $5,000. Okay, so naturally at $800,000, you gotta have almost $8,000 rent coming in, the 1% rule, etc. So I'm saying, Jim, so are you saying here, so if the property is not cash flowing with the income that's coming in right now, we're talking about 4 units. If it's not cash flowing right now with the income coming in, how can you move on a deal like that?
So don't buy a non-cash flowing deal.
Okay.
Okay. So you need to at least break even. If the property will break even, or if you have $1,000 you can throw at it every month, and you want this property because you know it's a great property in a great neighborhood, buy that property. Don't buy something that you're going to be upside down on every single month and you're just getting deeper and deeper in the hole. For James or anyone else that lives in a major metropolitan area and you feel it's too expensive, I would tell you, log on to the USDA's website and look at rural areas. Almost everyone that lives in a metropolitan area can buy a apartment building in a USDA area for peanuts, compared to what you're buying. And it'll be within 30 minutes drive. So maybe that's where you should be looking. Plus the USDA, depending on your credit and depending on the circumstances, they have 100% loan product. So look at the USDA's website, find where those maps are and get out there in those smaller cities that are within an hour drive of where you live and buy yourself something at 35 a door or 45 a door.
Can I piggyback off that? My name is Cheryl. Jim,
yes, Cheryl, go for it.
Oh, hi. Hi, I'm new to the group, but I agree with you 100%. Years ago, I purchased a property from my aunt and she wanted $450,000. It was appraised for $350,000. She held a $100,000 mortgage for me for 3 years and I paid her off. And then a couple of years ago, I was able to sell that property. And mind you, at that time, $100,000 over was a whole lot, you know, and I was like in my early 30s and I really didn't understand real estate like that. But I did pay it and she held the mortgage and I was able to sell that property a couple of years back for $3 million. So I agree with you. Just go ahead. So it was a landmark building for family and I had a daycare center in it also.
And
Cheryl, so I agree with you. I'm willing to do that, to go to pay more.
And Cheryl, you overpaid what, 35% on that building. So
yes,
everyone here, you need to pay attention. If you're not a real estate investor, if you don't own something today, you need to really, really search your soul about what she just said. She sold that property for $1 million. Now, that doesn't mean all of you are going to do
No, you're wrong. 3 million.
Holy cow. You know what, Cheryl? That was a horrible deal. You overpaid.
Strictly horrible. What is he doing?
So that, you know, that's what it takes to be a real estate investor. You got to overcome your fear. You've got to take action. So just get out there and do it. Stop making excuses. Go do it. Anyone that wants to be a real estate investor, you can be a real estate investor this week. You just have to make the decision you're going to do it.
Awesome. Patrick.
Stand up.
Yes, I'm having a problem with the grant writing part. I'm trying to find deals and had people like James stuff to help me out. But my problem is when I try to get the program that you were just talking about, I don't know nothing about computers. I'm just starting to learn the computer side of things, more like machine to work with my hands and stuff. Kind of forcing retirement, and I'm learning the computer technical side of it. Right? A whole lot of stuff I don't know. I downloaded, but I don't know how to get it onto my folder so I can start doing a grant write. To put the information on, I don't know how to get the blank form where I can use it. So right now I have about 3 properties, but I can't get them underwritten. So I can put a LOI on them before I lose them. So that's my problem.
What size properties are they, Patrick?
One is a 97 unit. Thinking one is maybe smaller, maybe about 10, and one maybe about maybe 6 or 4.
And where are they located?
In Texas, Houston, Texas.
And are you in Houston?
Yes.
Okay. So on the 6 unit, what do they want for the 6 unit?
I think one of them they was looking for. I think that I have an 8 unit need to be redone. They want about 400,000, and there's another one was like 6, and for the 10 million for the 97.
Okay, so what I'm going to tell you is you don't need to underwrite the small deal, the 10 units and under. You don't need to underwrite them. All you need to know is what the rents are in your neighborhood within 1 mile of that property. You figure out what the rents are. That's all you need to know.
Oh, okay.
And you can put in an LOI. So I want you to get with Daryl and say, Daryl, Jim told me I didn't need to underwrite this. I just need to check the local rents. And I want you to personally go out, and Daryl will tell you how to check the local rents and do that. And let's get that, anything that you have right now, if you got 1 or 2 or 3 of them that are 10 units or less, I want to see LOIs on those this week.
Okay.
You figure out how to buy them.
Okay. And how about
in Houston that would be willing to partner up on that, then make yourself known.
Okay. And like, how about the part for the repairs and stuff?
Don't worry about it.
All right.
Put the information in the chat.
Okay, Desmond. So Patrick, Desmond, are you in Houston or you just are willing to partner up?
I'm in New Jersey, properties in Virginia, but I was telling him put his information in the chat.
Oh, okay. Okay. Yeah,
Yeah,
Patrick, make sure you put your email address and phone number in the chat.
Okay.
And also on the 97 unit and learning to underwrite and learning to use the computers, most local libraries have great programs that will teach you how to use Excel for free and teach you how to use the computer. So if I were you, I would get with, are you on the GOB network already, Patrick?
Yes.
On
well, I'm a student of Daryl.
Okay. Well, I would advise you to get on the gobnetwork.com, find all the other people that live in Houston, and see if you can start a local seniors meetup for non-computer people that want to meet together and learn from each other, and start a small 3-person, 4-person, 5-person training type thing at a library where you all take the Excel class together and you all start learning how to do this collectively together. And even if they're not on the GOB network, if you can find 2 or 3 or 4 other people, let them know at the library, look, this is what I want to do. And I want to start something to teach and I want to learn and teach how to create financial literacy using real estate as a vehicle. And I'd like to start a seniors group here at the library. Can I post something on the bulletin board and have your name and phone, email and phone number there, and let people reach out to you? As soon as you get 1 other person, start the group.
Okay.
And Daryl or I or a lot of other people are willing to drop in and do that, not only in person, but also we'll do it virtually. So that you're there, we can do it both in person and virtually. So you can have other people from around the country that aren't in Houston, but feel like I've never used a computer, I don't even know how to turn it on, and we can work together.
Great.
Right.
Appreciate
it. No problem, Patrick. Who else has a question? Or Alicia, if you've got something you want to continue with.
Yeah, don't be shy. I know a lot of times people leave or drop messages in the chat. Just unmute yourself. Go ahead, Lisa.
Hi there, I'm Lisa Russell. I've done something very similar. I've put together a group of investors from all over the United States, and we do a weekly Zoom call. And it's really, we've used it as a learning tool to practice underwriting, to help each other, look for deals. And all of that was, these were individuals on their own trying to do it on their own. And what I found is by coming together as a group, we all, got to practice, we got to ask questions, and then we bring in people that are, experts in different areas, whether it's raising money or evaluating or underwriting. And then they do kind of a mentorship. And we started that really because I saw so many young people in it wanting to be in the industry and understand investing. And so most of them are under 30. And so I've just, like I said, started my first team. We call it Team Atlas. And then we have Team Bravo. And we've got a third team that's just forming. But I think part of it is just taking the action. Action first, think later. I really like what Jim said. Thank you. I'm Lisa, and I'm complete.
Awesome. Lisa, you sound like you've been on Clubhouse.
I'm a Clubhouse girl. That's where I hang out most. So, yeah.
Awesome. And so I do have a question. How many 20 to 30-year-olds do we have on this call? Just curious. I see one, Raheem.
What was
I'm
the
20
question?
at heart. Does that count or no?
What was the question?
I said, how many 20 to 30-year-olds do we have on this call?
Hey, I still count. I got like 20 days still, or 30, 20.
20 days. Okay, well, happy birthday month, Samson. Awesome, awesome. So I'm gonna put you guys on the spot. And what I do see is we have some youngsters that are very experienced, which is fantastic. Why did you get this? Two parts. Why did you get started in real estate, and who was the inspiration for you to invest?
My mother. She always say, Raheem, you got to wake up to get up. And I kept asking myself, what does that really mean? To wake up to get up, you got to have a sense of ownership. Like you got to demand a force on your life called purpose. You have to be some, you got to become some. And mom inspired me. And from there, I started sitting down and trying to figure out what was the smartest industry to get in. Real estate got the most tax advantages. So we get a check from driving, from coming back, from analyzing the property, from underwriting, using all this ink. We got a tax write-off with the government. So that's good economically for me. So it was a smart decision for me for that.
That's fantastic. So Raheem, repeat what your mom said one more time.
You got to get up to wake up.
I like it. Awesome.
Get up to wake up. Smell the coffee, basically. Because I was sleeping. I was been a bummy kid early on in my life.
Well, hey, you turned it around. So that's fantastic. Go ahead, Samson.
Oh, I was going to ask a question, but I did get into real estate because we had a landlord, or I realized that we were paying to our landlord all the time. We had a kid back then, a baby, and I just felt frustrated that, hey, this money is going into somebody else's pocket, it's going to somebody else's mortgage, and I asked my parents, hey, what do you think? Should I buy a house? And they have, they've rented out before and they have properties. So they said, go for it. Didn't get much guidance. They let me go by myself, just do my own due diligence research. Now we're going full cycle. I just sent in the contract from Mexico to Finland just now, yesterday, and we're gonna sell the property. And even though we didn't do anything, we didn't do enough of research. We didn't do enough of market research or renovations through all of it. We pretty much did all the mistakes you can think of. That's invaluable lessons, taking those steps. And I did that at 20, and now at 29, I'm selling it. And yeah, so definitely go for it if you haven't already. Doesn't matter what your age is, just go for it. You're probably going to make mistakes. Even when you're super, super prepared, you're still going to make mistakes. It's life. It's investing, it's traveling, it's the same thing. You're never going to be fully 100% without mistakes, because there's challenges going to arise that you can't really prepare for. So
yeah, that's awesome that you point that out, because we all learn from our mistakes and it makes us stronger. But also learning from our mistakes also helps, the next investor not make that same mistake. So just like Jim said, make sure you take action. Action is going to be very important this year, because times are changing and you want to make sure that you invest and get in on the opportunity when it's presented, because when it's presented to you, that's your time to act. If you don't act, it's going to go bless somebody else. So make sure you act, but also make sure you partner up with someone experienced so that you don't make the same mistakes that they've made, and you can advance and benefit from it. So that's fantastic. Any others?
Alicia, while we're waiting for other people to raise their hand, I also want to say something about what Sam just said, which is age doesn't matter. And that doesn't matter if you're 20 or if you're 70. If you're trying to do this, don't let your age be part of the equation. Don't let your age be your limiting belief that you can't do this. Don't let anything be your limiting belief. If you think you're in a bad market, there's money that can be made even in a bad market. If you think you're in a bad city, there's good deals to be had in a bad city. If you think you're in a city where prices are way, 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 way out of line, you can still find a deal that works even in that city. Don't let anything hold you back from doing, especially when you're starting out. Look, you're going to make mistakes on every deal. Every single deal. I don't care if you've done one deal or if you've done 100 deals. You're going to make mistakes, but you're going to minimize those the more deals you do. So if we know you're going to make a lot of mistakes and you're going to make them on the first deal, make sure that deal doesn't cripple you moving forward. So if you start right out of the gate, your first deal is a 100-unit deal, and you make a lot of mistakes and you piss off 50 investors, you're probably done. You're probably not ever going to do this again. But if it's a 4-unit or a 5-unit or 6-unit, and you only piss off your neighbor or your mom or your dad, you only have one investor, you're going to recover from that. So make your big mistakes on the first deal, and don't let any excuse stand in your way. The time, it's just not the right time. We're about to have a market crash. I'm about to lose my job. But if I was about to lose my job, I definitely want to buy something now before I lost my job.
Right.
So that now I have something other than the job. Look, too many of us are working harder than our money is working. We need to make sure our money's working harder than we do. And that's the biggest lesson we can learn if we didn't grow up with that mindset. Your money needs to work harder than you do. And we see that Evan raised his hand.
Yes, go for it, Evan.
Yeah, my name's Evan. I'm from InvestNext. It's a software that helps people manage their investors. But I was just going to say, like, what I loved about what Samson said is you get to make your own mistakes. Like, yeah, mistakes are going to happen, right? But if you're investing in the stock market, you don't have any control of your money. When companies make a mistake, you don't have any way to learn from that and improve upon it. So I just bought my second house a couple months ago. I did it because I moved from California and I was sick of paying rent, just like Samson. And, moved from California to Denver, you go from 800 square feet to 2,900. And now I've got an office and, I don't have to work out of the spare bedroom on a desk that's barely big enough to fit my computer. But the thing I love about real estate is it's always going to work for you. The market's going to fluctuate. The one thing that never comes down is rent in multifamily buildings. The prices of housing drops. They don't bring the rent down to accommodate for it. Rent stays where it's at. It's always going to recover. Invest in real estate. That's what I've been preaching for the last year. I took too long to learn about multifamily investing, and now I'm working towards becoming a start as a passive investor and then buy my own buildings eventually someday. So just being a sponge now, attending these meetups, meeting with like-minded people is so important. So that was all I wanted to say. Nothing else, but make your mistakes, make them whenever, whether you're young, old. I love what Jim said. Doesn't matter if you're, 20 or 70, it's the safest place to put your money.
Awesome. Thank you, Evan. Moses.
Hi all. I just wanted to add, as a realtor for the last 28 years, when I was first introduced to real estate, I've always said to folks when they ask me why are you investing in real estate, I always said you have to know what depreciation means, and you have to understand it, because there is a big power in what your passive losses can do for you, especially if you have other income to offset and what's not. And I think that's something that we should early on, because I teach this to younger folks, and I know age has nothing to do with it, but I believe when I heard what Jim Biggs said, why the GOB was formed, I was inspired to know that he had that drive and that passion to let everyone into this, because it changes life. It makes us all so much better when you have control and you can help one another. And just being on this group that you can reach out to someone and ask them question. The internet changed the platform, and I always said, like, I understood it from way back then. And that's why I materially participate in some of my assets, and I also have the real estate rep status, because it does so much more, and you can better structure yourself in this entire equation. So I would want to add that make sure you take some type of tax boot camp or something to understand how you set yourself up, so when you have your plane off the ground, you are hitting it from all cylinders, and you're benefiting in so much more than just having a return on your investment.
Awesome. So I have a question. What is, and this is for you seasoned investors, what is one of the most challenging experiences that you have gone through? What did you learn from it? And what do you recommend for what steps do you recommend for others to take to avoid encountering that type of challenge? I wish I had some music like dun, 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 dun.
What's the question again? And am I experienced enough?
Yes.
So the question is, what is one of the most challenging real estate opportunities that you've encountered? What was the challenge? What did you learn from it? And how do you recommend we, as inexperienced investors or middle of the road investors, can learn from that experience?
Okay, may I go, or
Go
somebody else?
for it.
Awesome. So I'm Samson again. We were in San Antonio last summer searching for off-market deals. We found a great one from a friend of a broker, and that broker was representing both the buyer and us, both us, the buyer, and the seller. What I learned from that deal was we did our due diligence. During due diligence, we noticed there was some heavy renovations, foundation issues, and whatnot. And we also learned that the seller was not as motivated as he first presented himself. And we and our partners, we decided that, hey, we have to be able to go through all of the units. I think I talked about this in an earlier mastermind meeting, but and we talked with the team too. What do we do here? We're stuck. The buyer is representing both ones, both the buyers and the sellers. There's an intermediary contract that hasn't been signed, that should have been signed day one. We didn't know that. And we just learned that, hey, sometimes it's better to walk away rather than get into a dangerous situation that we were heading for. So I would say that's one of the biggest lessons that I learned from last year. with the unit that we have in Finland that I'm selling right now, when I said a lot of mistakes with the renovation, overpaying, and also the renovations were, I mean, we got the zoning after the fact that we had done the renovation. We did so many mistakes when it comes to renovating. We didn't know. I mean, I'm gonna take full responsibility because I was leading everything. I had no idea because it was our house. I was thinking, why do I need to ask the government or whoever to renovate? It's our building property, right? So we just went ahead. We hired a lot of contractors. Everything was perfect. We had the zoning district. They came and they okayed it, and then we get a letter from the municipality 4 weeks later, or was it like 2 months later, that, hey, we see that you have made changes to your property. This is illegal. Meet with us ASAP. Kind regards and whatnot. I went there. We talked. I got us out of that. It cost us a lot because we had to get an architect to sign under that everything is done by proper, companies and whatnot. That was I mean, it wasn't that expensive of a lesson. It could have been way more if we would have had to redo everything that we already done. But yeah, those are some of the mistakes that I've learned the hard way.
Awesome. Thank you, Samson.
Alicia, I'd like to
Alicia,
also answer that.
Alicia, by me driving, I really can't see what's going on, and I can't raise my hand because I'm driving. But I wanted to answer that question in reference to what did I learn early on. So early on, when I was initially looking for properties, and I didn't have the guidance as to what I should be looking for, how I should pick a market. So I wind up looking in just about every state in the United States, and I got proof. I bounced around for almost a year, not building relationships with brokers. And once my mentor told me, he said, until you stop bouncing around from state to state, city to city, town to town, you're never going to get a deal. And once I stopped that and I started focusing on a particular state, then a particular city, then within that city, that was when I got my first property under contract. But I was bouncing around. I learned a lot. And now today, that's one of the things that I highly recommend when I hear investors bouncing around, moving from here to here to here to here. You know, if you want to get a deal, stop bouncing around and focus on 1 or 2 markets, no more than that, and go forward. I learned a lot from that.
Awesome. Thank you, Daryl. Jim, since you're still here, if you wouldn't mind sharing.
Okay, I was just getting ready to disconnect because I have another meeting here in just a moment. I just wanted to say, look, even Samson, I don't know, how many units was that in San Antonio, the one that you guys walked away from?
That one was 8 unit, and there was another 24 for the same seller that we also walked away from.
Yeah. So if I mean, Samson didn't do anything wrong, but if he had the ability to take that down, whether it's with me or somebody else, and even if he had never been allowed into any of those units, I would have said, buy it. Buy it. It's got foundation problems. Can that be fixed? Yes, buy it. Time is on your side. Okay. The mistakes you make on these first few deals, you will never remember them. You will never remember them. And the reason you won't remember them is because of all the successes you're going to have as you get further into your career. But you'll never get further into your career until you overcome your fear and start buying a few smaller assets. And so get started. If you ask old investors what your biggest mistakes were, they never tell you about that 10 unit that had foundation problems. What they'll tell you is, I wished I'd have bought more deals. And the second thing they tell you is, I wished I hadn't have sold all my deals, because they just kept appreciating and appreciating and appreciating. You know, I should have just been a collector and sell them when you need the money. But if you don't need the money, you know, just hang on to them, you know, because they're all producing income. And most of us are looking for passive income. We're not looking to necessarily just have paper money, which that's what your PFS is. Your personal financial statement, your net worth is paper money. Okay, you can increase your net worth and still be cash poor. So most of us, if we want to retire, if we want to do, you know, have a different lifestyle, we need to create monthly cash flow. And so that would be my advice. Don't let anything stand in your way. Just do it. Just do it. And please don't get off this call if you've got time to stay on. This is a great call. There's lots of experience still left on the call. Wished I could stay on, but I've got to jump to another one.
Hey, Jim, before you go, Jim, you're a rebel, huh?
My other meeting.
Hey, Jim, okay, you go.
What's your question, James?
No, I was just gonna say Jim is a rebel. He's not a conventional person. He's a rebel, huh? So I guess we all have got to become rebels, huh?
Right. Right. And this meeting is being recorded, so Jim will probably see it later. And you bring up a really good point, James. Rebel, you know, in a positive way. We've also got to be relentless in what we do. We got to push, because starting out, it may not feel like it's easy. And that's because we're in the learning stage and we're always going to be learning. And as Daryl mentioned, being focused in a particular market, being focused in using a particular underwriting model, that's what limits the type of stress you feel, and is able to give you like a laser focus, so that you don't have to keep switching and keep learning different models or keep learning different markets. You specialize in the markets that you specialize in, and then things will fall into place. And so I see some new people. If you're not new, apologies, but is it Neil Witt? Hi, Neil, how are you? Can you hear me? I can't hear you, but you're not muted.
I think he's at work, so maybe that's why.
There was a question from the audience about where can we find these recorded meetings so we can review later. It would be a great thing to take up.
Awesome. Yes. So Daryl records to the Commercial Multifamily Masterminds page, which you see live on Facebook here. That goes to the page. And then Daryl also has a YouTube channel that he can post to the group and give you the extension of that channel. But that's where the recordings usually are. And you can watch them when they're posted. If you guys have not connected with Daryl already, I did drop his information in the chat earlier, but I will drop it in the chat again. Make sure you reach out to him. He loves connecting with everyone, and he is a wealth of knowledge. If you're struggling with underwriting, there's underwriting classes. Are you all on the GOB network? If you're not a part of the GOB network, reach out to one of us. This is Daryl's call, so reach out to him. If you have any questions, I'm available as well. I dropped my information in the chat earlier. Janelle, Samson, we're all on the same team. Kenneth is a veteran here. There's a lot of us that are part of the GOB network. Wayne, Sal, James, Moses, Raheem, all of us are. So if you guys have any questions, need any help, reach out to one of us. But as I was saying before, for underwriting, there's an underwriting that occurs every Thursday evening. There's also, I think it's Charles Seaman that does it on Saturdays. So when you become a part of the GOB network, look at the calendar. I will actually share it here just so that you can see it.
Hey, Alicia, I have a question.
Sure. Who is that? Dennis? Hey, Dennis.
Yeah. Hey, how's it
Go
going? I'm
for
part
it.
of GOB as well. So I heard Jim, and I'm trying to multitask, mention anything under 10 units, you should be looking at the rent rolls, right? And I guess my follow-up question to that, whenever you look at, like, let's say multifamily, which would be considered from a mortgage perspective, 7 and more units. But if you look at, you know, anything beyond a single, that technically is considered multifamily, right? So I have always looked at anything that's under 4 units. I looked at comps. Is that a wrong approach? And can you expand, if you can expand on anybody else, what he meant on just look at the rent rolls? Was he looking at from an increasing perspective, or just trying to understand that a little more?
Yeah, so the first part of that, anything that is 2 to 4 units is residential, right? So that's why most people look at comps there, because comps are what mainly affect the residential market. When you look at 5 units and above, that's commercial. And so in commercial, we look at rents. And I believe what Jim was referring to was the market rents, because even though you have the rent roll, you know what the current tenants are paying currently, right? There's a difference between what they're paying currently and market rent. Market rent is usually more than what the tenants are paying currently. And so that gap is what you have as value add to where you can improve those units, renovate those units, add different amenities to the property to help to get those rents up. If it's already renovated, you may just have the opportunity to have a less than, buy the property and just increase rents. It all depends on your model. But I'm sure Nicholas and Moses may have some more to add.
Well, I think the one thing that I would like to add there is I still, knowing what you know now about forced valuation, you still want to do your numbers and you look at your market rents, so that, because a regular appraisal will have in there a comparisons value, and they'll also have an income value approach as well, so you can see how they're appraising it based on that. Obviously, you know, the bank's going to look at the comparable when it's under the 4 and less units. But yeah, I would still do our numbers the way we do it, because we're looking at it from a true investment vehicle. So we know where the forced valuation is, and compared to where the comparables are happening based on market cycle, just to be prudent in the investment. And, you know, you could do all the other cost segregation and all, whether it's a, 4-unit residential, you still all have those tax benefits.
Awesome. Thank you, Moses. And I want to be mindful of everyone's time, because I know it's 10:08 my time, which is 12:08 Eastern. Just want to be able to show you all the GOB network page. This is the GOB network over here. If you want to become a member of the GOB, you can, I think over here, I have to log out. Let me see. You can register. And so when you register, put in there who referred you, because as I said earlier, it is by invite only, which is how we are building the network. There's so much value there as part of membership. You can see the public calendar where there's different trainings that occur. We also have a private calendar that we do. But you'll see how we have the Capital Raisers Club at 1 p.m. And then we also have Lawrence Laddie's meetup at 6 p.m. and Julie Peterson's at 7 p.m. So there's a lot of value that is provided as part of the GOB network. So if you're not already a part of that network, make sure you become a part of it. And so I'm going to go ahead and stop the recording. Thank you guys so much for participating. I'll be here, as Daryl always does, for another 30 minutes. But we love the opportunity to share this time with you. Make sure you register for the next meeting, which is every Tuesday at 11 a.m. Eastern Standard Time. Thank you so much.